Hello, welcome to the Speculation Lab. After testing a multitude of strategies, both effective and ineffective, I've discovered that any strategy significantly improves in success rate when combined with volume indicators. This not only enhances the likelihood of winning trades but also noticeably bulks up your wallet. In this issue, we'll discuss the king of volume indicators, the volume profile. If this sounds appealing, be sure to hit the subscribe button and stay tuned to the end. Your wallet this year might just be rescued by it. As a top 100 global website, TradingView is the world's premier trading chart platform, housing thousands of excellent indicator strategies. However, the volume profile indicator stands uniquely in a league of its own, a testament to its esteemed status in the world of indicators. Upon opening the volume profile indicator group in the indicator panel, you'll find a set of 5 indicators, each serving a distinct purpose. Let me explain them one by one. The first one is the fixed range volume profile. By selecting this indicator and choosing a starting and ending point, the volume distribution for that specific range is detailed on the chart. The volume profile visible range (VPVR) indicator, a horizontal volume bar, differs fundamentally from the traditional volume indicator. It's not just a matter of orientation, horizontal versus vertical. The volume indicator represents the trading volume within a specific time frame. For instance, on a daily chart, a volume bar signifies the total trading volume for that day. In contrast, an hourly chart reflects the trading volume within that hour. The volume profile indicator, in contrast, represents the trading volume within a specific price range. This provides traders with a clear view of the price levels preferred by other market participants, identifying the price most accepted by both buyers and sellers and the ranges deemed valuable for trading. For example, the range marked in the chart from $3,850 to $69,000 shows the trading volume at each specific price during this uptrend. The area with the highest volume is centered around this red line, the point of control, POC, suggesting that when prices approach this range again, there's a high probability of sideways consolidation before a directional choice is made. The price at the POC red line, indicating the highest volume level, is a hotspot for trading activity. When prices revisit this level, breaking through this range in one attempt is usually challenging, making the POC often considered a significant support or resistance level. The fixed range volume profile allows observation of transaction volumes in specific or crucial price ranges, such as in a unilateral market movement, a consolidation box, or persistent fluctuation trends. As a confirmation indicator, the volume profile can corroborate with many other indicators. For instance, if the POC coincides with Fibonacci levels or supply and demand zones, it validates their resistance levels or confirms substantial trading activity at these points. Consequently, when prices approach these areas again, the probability of a reversal increases. For instance, let's use the fixed range volume profile to examine the first downward trend from November 10, 2021 to January 24, 2022. We can see that the dense trading area lies between $45,700 and $49,500, with the POC at around $49,000, where the trading volume peaks. Next, by applying the Fibonacci retracement from left to right over this range, we observe an overlap between the dense trading area and the 0.382 Fibonacci level, creating a resistance zone in conjunction with the POC. After several fluctuations, prices eventually faced resistance in this overlapping area, leading to the start of the second downward trend. Continuing our analysis to the second downward trend, let's tentatively consider $17,592 as the bottom of this movement. Here, the POC of this range, indicating the highest trading volume, is near $30,000. Linking this trend with the Fibonacci retracement, we find that the 0.382 level once again overlaps with the dense trading area and the POC, forming another resistance zone. These two downward trends show remarkable similarities. We can observe and anticipate whether the price, upon approaching this overlapping resistance zone, will replicate the previous trend. When the price nears this resistance area, combining indicators such as MACD, Vegas wave, or candlestick patterns can help in deciding the trading direction. For example, at this zone, does the daily Vegas tunnel form resistance in conjunction with this level? Is there a continuous bearish divergence in the MACD? Or, on a smaller scale, do candlestick patterns indicate a head and shoulders formation? Cross-verifying these signals can significantly enhance the certainty of trading decisions. Next, let's discuss the settings of the fixed range volume profile indicator. Opening the settings panel, the first option is the number of rows. The row count determines the density of the volume bars. Increasing the row count from 24 to 100, for example, significantly refines the price range detail. The volume value is set by default to 70, meaning the chart will only highlight the area around the POC that accounts for 70% of the total trading volume within the range, dimming the remaining 30%. Adjusting this value to 100 makes all volume bars distinct and clear. To focus only on the most densely traded areas, you can set this value below 20, highlighting only a small section of the chart with the rest of the volume bars dimmed. This function helps in identifying the most valuable dense trading zones. In the Style tab, up volume and down volume settings adjust the colors of the dimmed areas, while Value Area Up and Value Area Down change the colors of the highlighted sections. VH and VL represent the highest and lowest prices in the value dense trading area, respectively. Enabling these options delineates the boundaries of this range. The numerical options in the Style tab display buy and sell values on each blue and yellow volume bar. The width percentage, set at 30 by default, refers to the width of the volume bars occupying 30% of the range. Changing this to 100 extends the POC volume bar to the right boundary of the range, primarily for aesthetic purposes without special significance. The default configuration is on the left, but it can be switched to the right, displaying the volume bars on the right side of the range. Developing POC tracks the trajectory of the highest volume POC within the range. For instance, in the chart, the initial POC was around $6,700, moving up to $9,150 and finally settling at $9,650. Hence, these previous POCs are also crucial as they can significantly influence price when it approaches these levels again. Developing VA shows the evolution of the valued area centered around the POC, though this feature is generally less used. Finally, histogram box allows setting the background color and opacity for the volume distribution chart area. The above explains the functionalities in the settings panel of the fixed range volume profile. The settings for the other four indicators in this group are similar. Next, we open the second indicator, periodic volume profile. This indicator allows us to observe the volume distribution of a single candlestick, similar to order flow analysis. By setting the period value to 7, we can examine the volume distribution of a range of 7 candlesticks. Changing the bar to day enables us to view the volume distribution over 7 days. This indicator is highly versatile, allowing adjustments for various time periods as per one's requirements. The third indicator is the session volume profile, which marks the volume distribution of each day. It can be used to identify trends and pinpoint supply and demand zones. For example, in the 1-hour chart of Bitcoin's price drop from $31,536 to $17,592, we see that the POC, or the level with the highest trading volume, was continuously decreasing. This suggests that each day, many believed the price would fall further, leading to increased selling. When the POC starts rising, indicating no lower POCs, it shows a shift in sentiment, suggesting that the current price is deemed a good buying opportunity and control returns to the bulls. This area then becomes a genuine demand zone. Experience indicates that the greater the drop with a continuous decline in POC over a week or more, the stronger the support effect of the demand zone that emerges. The probability of the price halting near this demand zone increases. Conversely, for long positions, when the POC rises continuously for over a week and then declines for the first time, the area between this lower POC and the top POC can be marked as a supply zone, with high chances of resistance and a price drop when revisited. The fourth indicator is the session volume profile, HD. It differs from the third indicator only in its high-definition quality, displaying each day's volume distribution in great detail. Every price level's volume distribution is crystal clear, which is immensely helpful for intraday traders, minute-by-second traders, and even market makers, making it a very precise and effective tool. The fifth indicator is the visible range volume profile. As the name suggests, it displays the volume distribution from the first to the last candlestick visible on the screen. If the chart changes, the volume bars of the visible range volume distribution chart adjust accordingly to match the current visible range. The functionality and settings are similar to the other four indicators, but it's more user-friendly and makes the chart cleaner and more straightforward. Alright, don't forget to hit the subscribe button to stay updated with more profitable trading contents. I wish you a good morning, good afternoon, and good evening. Goodbye.